We just witnessed a strong impulsive move across the board on most of the charts around crypto. Bitcoin is up 7.26% today alone. XRP up 7.67%. Some altcoins like Solana up 11 plus percent. And of course, fear and greed still at about 16 in extreme fear, while the total market cap of crypto also has a strong impulsive move back to the upside. Now, I want to go over a lot of things in this video. I will be addressing exactly how and why the Fed is the main reason why we are seeing such a big move in this market right now, and why this could very well be the beginning of one of the largest recoveries in crypto this cycle. Now, let's first start off with the market cap of crypto, because we are back to $3+ trillion. Looking at the total, we have added over 100 and almost $40 billion in market cap in just the last 4 hours alone. Since our drop on the first, we have now added over $230+ billion in market cap. Now, the main thing that we are watching for is more so on the daily view here. What I'm looking at and what I'm watching is, number one, we have a low. We now have a higher low. We have a high up here. We need to break over and get a daily candle close over this prior high, which will be right around 3.08 trillion. Closing over this would start to form bullish structure. This will be the start of that. And the next key area of interest here is ultimately flipping the lows going back to the beginning of the month, which would be, and when I say the beginning of the month, I mean November. And that would be about roughly 3.33 trillion. After we flip that, then we mainly just target the prior highs. And we have quite a bit of them to target on this chart. As you guys can see, we have our high from November 11th. Prior to that, we have our October 27th high. And then we have the all-time high for the total market cap of crypto. So again, we have a lot to do here, but we are starting to see a nice recovery here and a nice strong, we're starting to see momentum form, which is exactly what we want to see in this market, especially if we are looking to expect a bottom. And also we want to see higher lows. And the same goes for Bitcoin. So looking at Bitcoin on the 4 hour, don't mind this slight glitch over here. This is something that's wrong with CoinMarketCap. I don't understand it, but regardless of that, we do have our low. We technically have a higher low here. What we want to see is, us to kind of chop around this range. We already have that price action at 90K plus yet again. But the main thing that we're looking at is on the daily. Again, very similar to the total. We still have that structure in place where we have our low and then our higher low. But now we are retesting that resistance that we originally rejected from. So we need to see on the daily a nice strong close over 91.5K. So 91,500 is the target here for us to break over and get a daily candle close over. This aligns us perfectly with support going all the way back to the end of 2024 and even in January of this year. So again, we're at that point where we're getting so close to officially confirming a strong reversal here and a bottom being in. I think that with higher lows in place like this, it's a very good sign of momentum picking up and strength forming. Now, XRP is no different as well. Looking at this on the 4 hour, we do have that low. We have our higher low. The difference here with XRP is when we go to the daily, okay, we do have our higher lows in place. The problem here is that we are about to hit major resistance on this chart. That major resistance is right around $2.23. We want to see a close over that on the daily as well. Until we get a nice close over these resistant levels, these are going to be very hard for us to break over, and we need to be very cautious as we do get closer to them. So until we start to flip these, don't expect too much. But similar to the total, right? Once we start to form a bullish structure on these charts, and once we start to, break over some key levels, Bitcoin on the weekly, I mean, we have a lot to do here. Number one, yes, we need to officially flip those lows going all the way back to December. The first major one would be about 92.8K. After that, we're mainly looking at, you know, $100,500, so 100.5K. That would be the next target here. And then after that, we're looking at the wicks here. Mainly, I want to see a nice move over 109K, and then we start to target that 120K level where a lot of resistance resides. So, you know, again, we have a lot to do here. We can't get too far ahead of ourselves. And we just mainly want to look at the lower time frame, and we want to make sure that we are starting to form bullish structure and breaking over these key levels. Until then, you know, again, we need to remain patient, but once we start to clear this level, we should be looking at some of these levels to be cleared. But the main thing that we're looking at, very similar to the total, is a break over these highs. And there's not a lot of them until we get to that all-time high. There's 3 highs that we are looking at now. An XRP, again, very similar structure. We need to break over that resistance level. And then after that, we're targeting the prior highs. The difference with XRP is that we have multiple highs here to break over. And it's well over, you know, the 3 count. We're already at, you know, so far on this chart, we're at 5. We technically have 6 highs that we want to break over on this chart. So it's going to take a little bit of time. It's going to take, you know, a lot more price action, but we should get there, especially with the help of all of the catalysts around the market. So far with XRP having a recovery today as well, XRP ETFs have been doing very well. Crypto exchanges are not safe. It does not matter the size of the exchange either. Bybit, the 4th largest crypto exchange by trading volume, recorded one of the largest crypto hacks in history back in February, where $1.4 billion was stolen. And if we're looking at some of the top 10 crypto hacks in history, most of these are resulting from major exchanges. So where do we store our crypto outside of cold storage devices? Well, ITrustCapital offers premium custody accounts, which is one of the safest places to store your crypto because these are fully closed loop systems which are designed to isolate and protect assets. And the best part about this is that if you are holding digital assets on their platform, they can only be withdrawn in USD linked to a US bank account, which means no external wallet connections can happen, which reduces the exposure to phishing or unauthorized transfers. So if you guys do want to tap into one of the safest places to lock up your crypto, you could sign up utilizing my link down in the description below right now, where you deposit $1,000 and you get a free $100 funding bonus today. The first 30 minutes, we were tracking some volume. Franklin Templeton saw 2.1 million, Bitwise saw 1.7 million, and then Canary saw about 1 million. Right now, just looking at this, and let me just make sure everything is up to date. Let me refresh this real quick. We should be seeing, you know, a significant amount of traction today, especially considering the fact that even yesterday was a very good day for, you know, the ETFs, and it was a down day. So right now, currently, we have over, you know, $40+ million in spot and also leverage volume. And the best part about this is we could track every single individual ETF as well. And we could see it's about roughly 7 million for Franklin Templeton's, Bitwise about 6.3 million, Canary about 3 million, Rex Osprey about 2.2 million, Grayscale about 1.3 million, and then of course Amplify roughly 120K. Nothing too crazy there. But again, the ETFs doing very, very well. And I do suspect with the market rebounding, and if we start to recover in a big way and we see what we want to see on the charts, then hey, these should start to have a much larger spike in the market. Now, why is the market rebounding? Why are we seeing such bullish momentum right now? It's because of what the Fed recently did. The Fed officially ended their 3-year quantitative tightening program. This is a very, very big update. It's actually very significant to have this because, again, if we're thinking about this logically, this has really been, it's been a drag on liquidity. So now we're going to start to see a big push on the liquidity side that's going to support markets in a big way. I've said it many times over, 4-year cycle, It's nonsense. We've never followed a 4-year cycle. There was never a time frame around this market. We mainly followed liquidity. Liquidity is everything. It's always been the main focus ever since the inception of Bitcoin. But we have here that the program started in June of 2022 to unwind massive asset buys made during the crisis, draining 2.2 trillion in excess liquidity by letting bonds mature without reinvestment. Officials halted it now due to ample bank reserves, while providing 13.5 billion in short-term cash via repos amid funding needs. This eases liquidity pressures, potentially smoothing credit for everyday Americans without easing monetary policy. Markets stayed steady with some eye and steadier conditions ahead. And yeah, this is very bullish. We love to see this. And also, by the way, at the same exact time that we are seeing this, we also know that the Fed has been pumping billions of dollars into the U.S. banking system. Here we have breaking U.S. banks. Fed Reserve just pumped $13.5 billion into the U.S. banking system through overnight repos. This is the second largest liquidity injection since COVID and surpasses even the peak of the dot-com bubble. Probably fine. Carry on. And again, if we think about COVID, what happened after COVID? Well, March marked the bottom. Then the markets went absolutely crazy after that. I do suspect that with the Fed pumping money into the system after they just ended QT, this aligns perfectly with the narrative that the markets are about to wake up, especially risk on assets, aka crypto. We have over here from Jordan Lindsay, we have QT officially ended yesterday, December 1st. The Fed's projected $20 billion per month in reserve management purchases aligns closely with its actions in 2019. We've now entered a new phase of the Fed cycle designed to extend the expansion for as long as possible before a return to outright QE. During this part of the cycle, risk assets tend to outperform, with leadership typically beginning in big tech and then moving progressively down the risk curve. I said that everything will change on December 1st. And yes, everything did change. This is typically a lagging factor though, but I do like the fact that we're starting to see a nice strong push in the market. Going into, of course, December 1st, we started to see a little bit of a weakening around the chart. We have that big sell-off, obviously, on the 1st. The Fed officially ends QT. We start to see money injected into the banking system. And then, of course, we do see the market rebounding in a bit of a way. Now, again, like I said, we can't get too far ahead of ourselves here. We need to be patient and we need to start to see some key levels broken. But this is a very good start. And again, I do suspect that liquidity is going to continue to flow. We have the FOMC meeting on the 10th, so we are 8 days away from that. That's going to be a big one. I also think that that's going to be a catalyst for the markets. I think that the price is already aligned perfectly with what's going to happen at those meetings anyways. So I think that the markets are already pricing in another cut. However, what the markets are not pricing in is how much that's going to improve liquidity. We also have to remember money market funds, they have a massive amount of money tied back to them. With every single rate cut, it actually harms how much those money market funds bring in. So that means that that money flocks into other markets. So that could also bring in a significant amount of money into crypto, supporting the market in a much larger way. But so far, this has been a very good sign of strength, especially with Bitcoin. And remember, if we are bottomed, okay, if this is our bottom, yes, we have our low here, but we could still chop here for a bit of time. Whenever we have a bottom, everyone expects this to happen once we bottom out. It's not a straight line up. It's never a straight line up. Even if we go back to April of this year, right? We were bottomed back in the beginning of April. However, we chopped for quite some time. And nobody thought that this was the bottom until we had that big, strong push to the upside. This took roughly, from the time that we actually bottomed to the point where we started to see momentum, it took about 2 weeks or so. Right now, from our bottom, if it is going to be our bottom, we are about 11 days out. We could have a much larger impulsive move by December 6th on this chart to break some of these key levels, and that will be the signal. That will be the sign that, hey, we are bottomed and we are going to go crazy here and we're going to retarget some of these highs. And that should carry the rest of the market in a big way, especially if we are going to see Bitcoin dominance drop in a big way, which I am expecting. I haven't been looking at it too much over the last couple days. I just recently made a update for the Discord. So it seems as though Bitcoin dominance is still kind of in the same sort of, position that it was in over the last couple weeks. We are starting to have a nice little rounding push to the upside. This could chop a little bit of time until we see that big drop, but I'm still expecting this thing to drop in a big way. I've been watching it closely. We want to mainly see big momentum to the downside, very similar to what we saw in the summer, like this, and also very similar to what we saw back in November as well. We want to see a cascade on this chart to really heighten alt season. But also during that time, we want to start to see Bitcoin really rebound and push to the upside to support altcoins in a big way. But overall, the biggest thing that happened was, of course, the Fed ending their quantitative tightening program. So liquidity is now going to flow. This is a big, big signal for the markets. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.